Apartment owners and managers, how do you know you have the best insurance policy for your properties? Well, there's no formula for a perfect policy, but there are 5 ways to evaluate and make sure you're getting a good deal for your premium dollars. Number one, evaluate limits. The limits of the building, personal property, and loss of rental income are stated on the policy deck pages. Evaluate each limit to verify they're not too high, where you'd be getting overcharged on your premiums, or too low, where you're in danger of getting penalized on a claim. For buildings, you can use a Marshall Swift estimate or a formal appraisal to help you determine the appropriate limits. Number two, evaluate exclusions. Every policy has an exclusions section. Some exclusions are standard to almost every insurance policy. The war exclusion, asbestos exclusion. Others are snuck into the policy and take away meaningful coverage. Apartment property policies might have a cosmetic damage exclusion, or liability policies might have an assault and battery exclusion. Review the schedule of forms, make a list of the various exclusion items, and talk with your agent about which ones might be restrictive. Number three, evaluate rate. Don't just look at the final premium and assume that a low premium is good. If a low premium applies to undervalued limits, you may still be paying a high rate. Divide the premium by the total values, buildings, contents, loss of rental income to get the composite rate, and compare rates across your quotes, or talk to friends within the apartment industry to see how your rate stacks up. Number four, evaluate valuation. Valuation refers to the way in which a loss is valued or measured. Replacement cost value, RCV, and actual cash value, or ACV, are the two most common types of valuation. Having replacement cost on your policy means the insurance company, after you have a claim, will pay the cost to repair or replace the damaged property. ACV is that replacement cost minus depreciation. So let's say you have a 20-year-old building and your policy is ACV. If hail causes damage and you need a brand new roof, the claim payout will estimate the cost to replace the roof and then deduct 20 years of depreciation. If you want the best policy you can find, make sure you have a replacement cost, or better yet, agreed value. Number five, evaluate coverage extensions. Policies add bells and whistles to their program through coverage extensions, affording important protection like sewer backup coverage, property in transit, and property of others. You can evaluate the various coverage extension items on a quote by looking at the first few pages, the deck pages, or looking at the schedule of forms at the end of the quote. There's not much uniformity, quote to quote, on which coverage extensions apply. One may include a certain item at a higher or lower sublimit, and it's often at the discretion of the insurance company. Think through the specific risk exposures of your apartment operations and evaluate if and how the coverage extensions apply. There you have 5 tips for vetting your insurance program and making sure you have the best policy that you can. Check out more insurance tips specifically for apartment owners and managers on our website, recordray.com, and check out our YouTube channel for more info. Thanks for watching.